a topic that's become I know, a very good discussion point in both the Kayak and KPAC fall meetings, and the Key Global Committee is also joining us today as well. For those of you that don't know me, I am Bob Skelton. I'm the Chief Administrative and Credentialing Officer for ASAE. In my role, that means I've had the opportunity to get up close and personal with insurance coverage during this pandemic. I have been handling our risk management for many years, and boy, this has probably been the busiest period I've ever experienced. I'll be moderating our panel of insurance experts this afternoon, and we'll help you get your questions answered. First, I'd like to introduce you to Seth Fleischer. Seth is a business development professional with Aon Affinity Nonprofits. He's an expert in the highly specialized event cancellation insurance market and holds one of the few underwriting authorities granted by Lloyd's of London. Joining Seth from Aon is Michelle Lee Evans. Michelle is an assistant vice president with Aon Affinity Services. Michelle is the program manager of the ASE endorsed Association Office Package program. And then Jeff Tenenbaum, he's one of the nation's leading nonprofit industry attorneys. I've known Jeff for many years, since I first started with ASAE back in the day. He's the managing partner of the Washington, D.C. based Tenenbaum Law Group. And then Mary Kate Cunningham. Mary Kate is our Senior Vice President of Public Policy at ASAE. In this role, she oversees ASAE's federal, state, and local advocacy efforts on behalf of 50,000 trade associations. And excuse that call, my apologies. Professional societies and industry partner members. Welcome to today's panelists. Now, I know, look, we're all used to Zoom, so just a brief reminder for a call of this size. We will take questions during the call through the chat function. ASE staff will be monitoring the chat and will be sharing the questions with the panelists. If necessary, and knowing many of you, I'm sure you're going to have a lot of questions. Ask them, get them in the chat, we'll get them out to the panelists. If we still have time at the end, we will open it up to additional questions, but I'm sure, and we welcome questions on the way. We really want to have a good, strong dialogue with all of you. So let's go ahead and get started. First, Seth, I'm going to start with you. What's the current state of event cancellation insurance, especially as relating to COVID-19 claims?
Good to be with you guys this afternoon. Yeah, I think we can kind of bucket the, everyone's had an event that's been canceled this year, at least one. I think we can kind of bucket anyone with an event into these three different categories. The uninsured events, people that had an event cancellation policy in place, but had an exclusion for communicable disease. And then the people that had an event cancellation and policy in place with coverage added on for communicable disease. So obviously the uninsured, that kind of speaks for itself. The folks with the policies excluding communicable disease, which would also exclude coronavirus. Unfortunately, there's no coverage under the policy for that. It's always been an option to add back this coverage on the policy for an additional premium. But historically, we've only seen about 10%, I'd say, on average, of our policyholders add that coverage back onto the policy, whether it's an issue with the additional premium or, obviously before COVID, nobody really thought that something like this could happen to the extent that it has. But yeah, what we've seen, even from that small 10% that did have the communicable disease coverage on their policy, is just an unprecedented amount of claims. I've worked this product through 9/11, as well as major disasters like Hurricane Katrina. The COVID-19 situation and the effect on the event industry is just unprecedented compared to those that were focused either on a particular city or under a relatively short period of time. So so again, going back, the 10% that actually had the coverage on their policy, those claims are being processed, and it's really put the market in a pretty fragile position just based on the amount of claims that are getting paid out and what a typical year looks like from the premium collected for this type of policy. It's really upside down right now.
Going forward, do you expect that this coverage isn't even going to be available?
Yeah, I mean, I don't want to. I think eventually it will. It could take a while, though. Number one, I really think that the carriers need to kind of get past COVID-19, like we all do, and start seeing events resume in a fairly normal way. I think right now the carriers do have a pretty good idea of what their claims are going to look like, even though maybe not all the claims have been filed at this point or settled. They have a pretty good idea, but again, those numbers aren't going to be finalized for a while. So I think number one is just kind of getting through the COVID situation. And, you know, if at some point it does come back, whether that's a couple of years from now, excuse me, what we're probably going to see is, you know, rates are going to be much higher than they were in the past for communicable disease add-on. And I feel like the carriers will have much more limited capacity. So that could bring up an issue of, you know, just because everyone wants to add communicable disease, they might not be able to, because there is going to be a capacity issue in the market. But that's, you know, it's more my prediction. I don't think that the carriers have really come out and said they're not putting a date on when they predict that communicable disease coverage could be available again.
Thank you. Now, but tying into that, of course, is general liability insurance coverage, which I know is Michelle's area of expertise. Michelle, what's happening there in terms of the COVID coverage and COVID claims?
Thank you so much for having me. So before COVID-19 occurred, from a general liability standpoint, the actual, if there was a virus exclusion on the policy, it was probably about 75% of the market had some type of virus exclusion or communicable disease exclusion. The other policies were silent. With general liability, it's based on bodily injury. So what we're seeing is if the policy has some type of exclusion or exclusionary language, going forward, it's probably going to have a tightening. And when I say tightening, the carriers are probably going to revise it in some way, shape, or form just for clarification. If the policy were silent, because there are policies that are silent, and coming towards the renewal, if they were silent, there's probably going to be some type of change to that policy form to add or clarify the communicable disease and or the virus, COVID-19.
Okay, we're having some good questions come in. So one of the first, if an association has communicable disease coverage for 2021, is there any chance that the carriers would remove or not honor the coverage?
No, they won't remove the coverage. And, you know, this is to the point of a multiple year policy, which has always been available. So you could have somebody that bought, excuse me, a policy at the end of 2019, pre-COVID, for their 2020, 21, and 22 events, and had communicable disease coverage for all three. And that's why I mentioned that, you know, the carriers have a pretty good idea of what the potential communicable disease losses are going to be. But that's kind of the unknown would be.
Somebody just shared their screen. Could they not do that, please? Barton, James Barton, you just shared your screen.
So yeah, I mean, that's really the unknown is going to be what happens with 2021 and 22 events that are on the books and that could potentially be paid out. You know, how quickly can we get past COVID and start resuming events, and whether those events are, like, you know, in-person events are resumed at full capacity or limited capacity. That's going to also probably play into, you know, what might happen, but they're not going to they can't remove the coverage from those policies.
And then,
can I just chime in with a couple clarifying points just to make sure everyone's on the same page? So that question from Sherry obviously related presumably to to event cancellation insurance coverage. And like Seth correctly said, if you have coverage baked into the policy, even if it's a multi-year policy going forward, the carrier will they're not allowed to take that out of there. They're contractually obligated to honor that. I will tell you that for all of our clients that have had communicable disease coverage this year for events that were canceled this year, it's looking like every single one of them is going to have their claims paid out, which is a good sign. It's a very laborious process going back and forth with the carriers. They're nickel and dime every expense to try to mitigate their costs. But for some of these, that's a lifesaver, sometimes millions of dollars for some of the larger meetings. As Seth also said, going forward right now, it's impossible to purchase that coverage. None of the carriers are offering it. And whether or not that changes in the future, Mary Kate's going to speak to a bill that's pending on Capitol Hill that could be very helpful in that regard. The commercial general liability insurance that Michelle was talking about, that's what a lot of people refer to as like slip and fall insurance. That has nothing to do with cancellation. Cancellation insurance is a form of property insurance. Commercial general liability is a liability insurance, meaning if the association gets sued for, say, an accident that happens at a meeting or conference, or an accident that happens when a guest is coming to the association's offices. That's the kind of thing that commercial general liability insurance is used for. And as Michelle, properly said, estimates are that somewhere from 50 to 75% of existing CGL, commercial general liability policies, have some sort of a virus exclusion in them. Even if they don't, many of the insurance experts that I've spoken to in recent weeks and months believe that, and I've read some articles about this too, that for various other reasons, partly because of what's called the pollution exclusion that exists in these policies, that carriers would almost certainly rely on that and will rely on that to deny claims. And then Michelle said properly, going forward, we're seeing that when these CGL policies come up for renewal, the carriers are adding even more exclusionary language to be sure that COVID-related claims are not covered. So in short, as associations start to contemplate the return to in-person meetings next year, some already have, but most have not, as they start to contemplate that, and you're looking for trying to get insurance coverage in the event that an attendee alleges that they contracted the virus at your event, never mind the causation issues there. But if, say, there was a cluster, an outbreak, and you got hit with some claims, it's going to be very difficult, if not impossible, to get your CGL carrier to even provide a defense to those claims.
all right, and a related question. This one's for you, Michelle. Should we have our entire portfolio of insurance coverage reviewed with a COVID pandemic lens? Is this a realistic investment of time and resources?
Good question. I think overall, every 3 to 5 years, you should have your insurance looked at, an overview. But from a COVID-19 standpoint, that's an ever-changing type of situation. So because there's legislation, because there's policy changes coming down the pike, possibly, you should absolutely speak with your agent on the subject. But to specifically look at it from a COVID-19 lens, your agent should absolutely be touching base with you on that subject. But I think it should be more of just a marketing type of situation, because your agent's going to be touching that.
Yeah.
Bob, I would say that generally speaking, doing a review of all your coverages to make sure you're covering all your key areas of risk and that you don't have big coverage gaps is always a worthwhile exercise. And I've worked with insurance brokers over many years to do that. Right now, though, in the COVID environment, you got two issues. One is, what coverage do you have under existing policies that were written and bound pre-COVID? That's one issue. And that's where you need to work carefully with your broker, your attorney, to aggressively analyze those policies and advocate for coverage if you believe you have coverage for particular claims. But then you have, on a going forward basis, right now, for new policies that are being renewed, it doesn't really seem like, with the possible exception of workers' comp, for employee claims, I'm not sure there's really any COVID-related coverage that you're going to be able to get under any policy. So if you were solely looking through, doing a review for your upcoming renewals for COVID-related claims, I personally don't think it's even worth it. But I think there's many non-COVID related reasons to do that.
And I think that's the key. COVID can't define everything. It doesn't represent all of our risks. And Seth, I think that's probably one reason to maintain cancellation insurance coverage.
Yeah, I mean, I think right now everyone kind of this year so kind of had the blinders on and just focusing on COVID and what's going on. But if we look historically back at where our claims typically are under event cancellation, it's more along the lines of your adverse weather, hurricane losses, winter weather. We still have risk with terrorism. When will the next 9/11 be? Natural disaster, quake and wildfire out in California. So, even though going forward right now, we can't get the communicable disease coverage on these policies, if I just look from a frequency standpoint of what claims we typically pay out, communicable disease is not a typical claim that we paid out over the past 20 years. It hasn't been an issue until now, but hurricanes and winter weather is an issue every year.
Thank you. And I want to turn to something that's been mentioned a couple of times, and that is whether or not there might be some federal help in terms of pandemic coverage. So Mary Kay, can you tell us what's going on there, please?
Sure, thanks so much. So since March, ASAE has called for the creation of a pandemic risk insurance program. The Pandemic Risk Insurance Act is one of our top 2 priorities, and it would create a public-private partnership to help fortify the private marketplace and incentivize the coverage of COVID and future pandemics under the traditional business interruption and event cancellation policies. And ASA has been deeply involved in the crafting of this legislation. We've worked closely with Congressman Maloney's office from New York from the outset to help provide language. Bob helped write some of this language. The 2 big things we pushed for were to cover event cancellation, which is hugely important to our community, of course, but not to all communities. And also to make sure that this would cover prospective losses from COVID as early as January 1, 2021. That date all depends on when passage is, and we don't expect that until the new year. But, and Jeff Evans is our lobbyist who's on the call now, and he's been working with stakeholders in the House and Senate, both parties, to try to, and also just all types of industry stakeholders. And if anyone wants to have their GR team involved, he's happy to connect with them. In September, Susan Robertson spoke at a congressional roundtable about this with other industry leaders. And I was so glad to have her as a kind of voice for events, because so many other communities don't really understand events the way that associations do. And on November 19th, there will be a hearing on this issue in the House in the Financial Services Subcommittee on Housing, Community Development, and Insurance. So that's hopefully some progress on that side. And there are other policy proposals related to pandemic insurance, and a lot of the conversations are ongoing. I think there are a lot of good ideas, and we're having conversations with the bill sponsor and other stakeholders about how to engage. So if anyone wants to be involved, we're happy to connect further.
Thanks, Mary Kate. And Michelle, before there's several questions relating to force majeure, which I'm going to get to. But Michelle, I want you to talk a little bit about the business interruption insurance claims that are coming out there under the commercial general policies.
So business interruption is part of the office package policy. And that office package policy includes crime, general liability. And so with the business interruption, it's very difficult to have a COVID-19 situation be paid out, because it has to, the policies have to have some type of physical loss based on the perils of the policy. So if there isn't a a physical loss based on that, the perils, the carrier, that's where they're going to point to see if coverage is going to convey. And if there isn't that physical loss, carriers are going to attempt to not pay out that coverage. So I don't know of any organization that hasn't had what's deemed to be some type of business interruption in their organization. But from a policy standpoint, I think it's going to be very difficult for a carrier to pay based on the fact that there isn't an actual physical loss to the property of the organization.
Yeah, and Bob,
Yes.
there have been a lot of business interruption insurance claims filed, and by, I don't know about in the association community, but in other industries, there's a lot of restaurants and other businesses have filed claims. A lot of this is in litigation right now because the carriers have largely uniformly denied those claims, and as to be expected. And I think, frankly, it's an uphill fight, for those insureds to try to get coverage. I know none of this is encouraging because they're pretty much, saying across the board, unless you had event cancellation insurance bound pre-COVID, there's really not a lot here with the possible exception of workers' comp. And it's frustrating. Now, it doesn't mean that there are not other things that you can and should do to mitigate your risk and protect your downside, which is partly what insurance is all about. Certainly a lot of things on the legal side, contractually and otherwise, that you can do to mitigate your risk. But on the insurance side, which is the focus of today's program, currently and going forward, especially without some federal legislation, it's not promising. And on top of it, and as Michelle and Seth can explain much better than I can, the insurance market generally has really tightened up in that premiums are continuing to go up significantly. Right now, even, Seth, what did you say the other day? Event cancellation insurance premiums have probably already almost doubled, and that's without being able to purchase COVID coverage, just, the communicable disease coverage. Just without that, the premiums are just going up significantly. I had a call earlier today with an association client that let go one of its senior folks, and the guy hired a counsel and reached out, and the old strategy of should we settle with them, should we just let them litigate and just file a claim with our D&O coverage to get employment practices coverage to defend the suit. You have to now factor that into the analysis of if we're seeing that insureds that file claims are getting dropped when they come up for renewal, or the premiums go up really significantly, that changes the whole calculation of when you might file an insurance claim, or when you might say, what, maybe it's better we just try to negotiate this and pay a little more and make this thing go away. So we don't want to risk losing our insurance coverage or paying a hell of a lot more next year in premiums.
And I want to follow up on something you asked Seth about. And, in terms, we've talked about, you still need event cancellation insurance coverage for those, I guess we would call normal risks of a problem happening at a meeting. But what about virtual meetings? There are risks there too.
Yeah, and that's kind of where we've seen the trend going in 2020, almost entirely virtual events, as well as I think into 2021. Once we start seeing some improvement, more of a hybrid event is probably going to be the trend. But it's really a brand new product in the market for virtual events. I mean, we've dealt with in-person events in the past that have a small virtual component, and that coverage has typically been built into the policies anyway for some kind of transmission failure. But now we're dealing with a whole new animal of the entire event is held virtually on a virtual platform, and there are risks there involved with that platform going down. Fortunately, at this time, the carriers are not open to offering any kind of malicious cyber attack or hacking of a virtual event, but it's more of just a technology failure type coverage.
Thank you. Yeah, and I know that's going to be important to many of us as the restrictions continue. Okay, it's not exactly insurance, but several questions about force majeure, which we knew it was going to happen. There's a very interesting question in the chat, though, And I've seen this now in some contracts where the hotels are offering COVID mitigation and protection plans to convince us that they can accommodate the event. The problem is it's mitigation offers, including cleaning stations, maybe some other things which may or may not have any real effect in terms of guaranteeing attendee safety. So, can we reject those hotel plans and continue to stand behind our force majeure clause? And, Jeff, I'll turn it over to you, but then I'd like to hear from Seth and Michelle on that too. What do they think? Whether there's any value in those kinds of accommodations and plans.
Sure. Happy to speak about this. This is something I spend time every single day on, as you can imagine, and have since the beginning of the pandemic, sometimes most of every day. So first off, most associations have had great success in utilizing the force majeure provisions in their event contracts, hotels, convention centers, other meeting vendors, to be able to cancel most of their 2020 meetings and conferences and be able to avoid all or most cancellation penalties. Sometimes with a straight up force majeure termination saying it was illegal or impossible or commercially impractical for us to perform under the agreement because of COVID. And if you had the patience to wait until about 90 days or less out from the start of the meeting, and there were still restrictions, governmental, state or local restrictions in place that prevented the meeting from being held due to the size, then you've been able generally to get out without penalty. A lot of meetings have been rescheduled, rebooked for future years as a way to avoid or minimize those cancellation penalties. That's been kind of an age-old strategy that has always been used to try to avoid or mitigate cancellation penalties, and many associations have done that. And we've worked on, my colleague and I, probably 600 to 700 conferences and meetings so far this year. And for those that have either rebooked or we've done force majeure terminations, hugely high, probably 95% success rate with paying little or no cancellation damages. That is starting to change. The hotels and convention centers have really tightened things up in terms of their response, some more than others. Not surprisingly, the hotels in the cities and states that have reopened faster and have little or no restrictions, and believe it or not, there are a number of places around the country that have literally no restrictions on gatherings, even very large gatherings. The hotel management and lawyers kind of take their cue from that and have been, in certain of these areas, incredibly aggressive. And to me, the most important factor always in force majeure analysis is the timing. It's much more important than the language in your contract. It's more important even than the state or city where you're holding the meeting, although that's probably the second most important factor. The most important factor is timing. I had a call earlier today with a client that is association looking to cancel their meeting next June, late June. It's impossible to do a force majeure termination next June, even if you have really favorable language in your contract, because the hotel is going to say, you don't have a crystal ball. How do you know that meetings like yours, even though they're banned today in our city and you couldn't hold it today, that many months away, how do you know that you're not going to be legally able to hold the meeting, that it'll be illegal or impossible, which is the language in most force majeure clauses. So that makes the options in the analysis a lot more difficult. If force majeure is not really an option to do a termination without penalty, and if you can't use it as leverage in your negotiations, which has been part of the strategy to date, then your options become more limited. Sure, you can try to convince the hotel to push the meeting back another year, because there are a lot of associations who have already decided we're not having any meetings at least through the first half of next year. Some have already decided all of next year. Depends on the industry and the profession. But it's getting much more challenging. And so now, to get to the question, now a lot of associations are having to contemplate, we may have no choice but to do some kind of a hybrid meeting. We know we're not going to get everyone in person. There's just no way. For most associations, probably through most of next year. But a hybrid meeting is starting to become more of an option, particularly for meetings, say, May, June, whatever, through the rest of next year. And then you get into the issues of, okay, if we're going to have even a small in-person meeting, a few things we have to do. A, we got to negotiate down our minimums for sleeping room revenue and food and beverage revenue. Otherwise, we're going to get hit with significant attrition penalties that might be as bad or worse than the cancellation penalties. And then second, we need to be able to put on a meeting in a way that mitigates the risk to our attendees, particularly the risk of contracting COVID. even more so if we know we can't get insurance coverage for that sort of thing. And so then, you know, and I wrote a whole article all about how do you, and ASAE published a version of it, how do you mitigate your risk from holding in-person meetings? The most important thing you have to do is to be able to demonstrate that you were not negligent in meeting whatever the prevailing standard of care is for holding meetings like that. So what does that mean? You first look to applicable state and local requirements, and there are some out there that say if you're going to hold a meeting, you have to do X, Y, Z. So you always start with what is legally mandated. There's nothing legally mandated at the federal level, but there is a lot of advisory guidance, particularly from the CDC. There's some really detailed guidance that is linked to in my article, the most recent article I wrote, about all the things that you can do to mitigate risk. Some of these things are things that the association can do, but a lot of these things are things that the venue has to do. A lot of things relating to sanitation and other things like that. And so what you really want to do is you want to make sure you're putting those obligations on the hotels, the convention centers, et cetera, as much as you possibly can. Contractually, through email correspondence, you want to be able to show, look, we are not being negligent because we're making sure that we are requiring the hotel to do all these things. And I hate to say it, but the safety plans that we've seen from most hotels and convention centers so far, and social distancing plans, are in a lot of cases fairly laughable. They're just not even remotely sufficient for what it would take to put on a safe meeting. We are using that in some of our contract negotiations to try to use that as to put pressure on the event to say, look, there's no way you can perform as contractually obligated, and your plans, you know, here's why. And therefore, you're basically in an anticipatory breach of contract. And so either we're going to walk away or you're going to rebook and not, you know, use it to impose cancellation penalties on us. I'm using that as a negotiating tactic. But if you do actually go ahead with in-person meetings, not if, but when, you do need to make sure that you're doing everything you possibly can, that you can afford to do, following all the prevailing guidance out there, and that you are contractually obligating the hotel and the venues to do their part as well.
Well, and I think one of the keys I would also add is if you're looking at meetings now in 21, you read your contracts now and start thinking about what your strategy is going to be. I was helping out somebody with their contract where they for a meeting next October. And they could cancel with a minimal penalty prior to this October. So they reached out and said, look, we're going to cancel unless you're willing to work with us, since it's a year out and we just don't know. But if you're willing to work with us on the cancellation penalties, you're willing to work with us on the attrition, you're willing to work with us in terms of room sizes and availability and sleeping arrangements and that kind of thing, then we can talk. And the venue was more than willing to do that because they faced the loss of the business for a minimal amount of money. So
well,
clearly, you know, be looking now at what your contracts say.
Well, that's great, Bob. And it's a great point because it's leverage. We're looking for any kind of leverage we have. And one piece of leverage is that if you're far enough out, cancellation penalties generally go up on a sliding scale as you get closer to the event. So if you are far enough out and the cancellation penalties are zero or minimal, they're usually not going to be zero for, you know, a meeting in 2021, but they might be far less, and they may jump up, you know, 6 months out or whatnot. And if the threat of cancellation and paying minimal cancellation penalties is significant enough, then that's great leverage you can use in your negotiations.
And I would also point out, now that we've all got some experience with virtual meetings, maybe not so much with hybrid, but hybrid meetings are twice the work. So you need to really think that through before you decide to go through a hybrid meeting. Do you have the resources to really pull that off? You might be able to get, you know, good insurance, as Seth mentioned, for technology failures for virtual meetings, but you still need the people to do it, and it's not easy to do. I want to follow up on one other piece of this, because the continuing question was, what happens if somebody does get sick? Are we going to have insurance coverage? And I think that's Michelle, I think you might have already addressed that, but you might want to talk about that a little bit more.
If someone gets sick at the actual meeting or convention?
Yes.
Okay. So in that case, there isn't any specific wording indicating whether or not there's coverage or not coverage. With general liability, that is what is called like your slip and fall type of coverage. So if there is someone that actually gets the virus, you would have to turn that information into the carrier, because the policy itself, there has to be some type of like physical loss, whether that be to the, to the property or a bodily injury. So the carriers today, there's nothing that says, again, some policies have a virus exclusion, some are silent. So is there pure coverage for COVID today? Not that we know of. It would have to really be turned into the carrier for them to make that determination.
And they're likely going to deny coverage, either because there's a virus exclusion and or because of the pollution exclusion due to causation. And there's no duty to defend the lawsuit if it's not likely that there's going to be coverage in the end. So you really, that's what I said earlier, you can't rely on insurance in this situation. You got to do other things to mitigate your risk so that you're not liable. All the things I said before, plus I get this question all the time. Don't forget about it. It's not going to be a silver bullet. It's going to save you from everything. But having a good liability waiver that your attendees sign that says, I knowingly am assuming this risk. I know it's a risky situation. And if I do contract the virus at your event, I'm not going to hold you liable. And by the way, I agree to follow all of your protocols and social distancing and mask wearing and hand sanitization and not going off site to, risky places and things like that. Building all that into your liability waiver. It's not going to save you. Liability waivers get tossed out by courts all of the time. They're not going to always work, but it's a helpful kind of belt and suspenders approach to mitigating your liability risk. And in that article that I mentioned, I have a link to another article of mine that has a model liability waiver for associations for your event attendees that you guys are free to use.
And also one of the biggest problems, and both of you touched on this, is causation. Where did you get where did you pick it up? You could have picked it up before the event, before you traveled for the event. And maybe it's the airline's fault if you took an airline, or if you use some other means of transportation. Or as Jeff, as you mentioned, you go to a off-property bar or something like that, and you get it there. It becomes very difficult, I think, for anybody to prove beyond, to the standard necessary, that you as the event organizer versus the hotel versus transportation versus other things is responsible, especially if you're following all the protocols to the extent that you can.
I would agree with that, except we had a case at the beginning of the pandemic here in the DC area where I'm in, at the Gaylord property, where a whole cluster of people contracted the virus at the Conservative Political Action Committee conference. This was, I think, in March.
I remember.
And, there, when a whole bunch of people contracted at the same time in the same place, I think causation becomes a lot easier to prove. If it's a one-off, that's a different story. But keep in mind, the reason I added to that model liability waiver, kind of the conduct, the self-regulatory conduct prohibitions, I agree to follow all these rules and not do X, Y, Z, is that also helps to protect the association in the event that someone does go off-site to a crowded bar. I was at an in-person association conference in late August in Savannah for the Georgia Society of Association Executives that I spoke at, and they did use that liability waiver with the attendees. And I think everyone followed it and no one contracted the virus, and they did a great job pulling off the meeting. But when you walk around downtown Savannah, apparently there is no virus there because they were really, really crowded bars, packed people, no masks. And if you had one of the attendees who was there and contracted it and came back and then infected other people, having the attendees attesting that they're not going to do those things, again, shows that you are not being negligent in how you're conducting the conference. It's going to make it that much more difficult for someone to hold your association liable if they do contract it at your conference.
Yeah, good point. And I think, especially with the CPAC event back, early on in the pandemic, they weren't doing any, there were no protocols really in place at that time, and that certainly helped them
If I were
spread it very, very quickly.
If I were defending them from a suit, I'd say, look, no one knew. I said before, to avoid liability, you have to show that you were meeting the prevailing standard of care. Back then, there really was no real standard of care in terms of social distancing and mask wearing and no large gatherings. It's a whole different story today.
I have a question which really isn't for our panel, but I'm going to throw it out there for to everybody to perhaps chime in on. This is the question: for new event contracts moving forward for 21, not yet contracted, can we expect hotels and venues to be much more restrictive than they've been in the past, requesting deposits, for example, if they had it done before? I don't. We haven't seen that as yet, and my experience lately has been they're actually been less restricted because they are really doing everything they can to get the business right now to get you to sign a contract. I don't know if anybody else has had a different experience yet at this point, so I'll throw that out there if anybody wants to chime in.
I feel like I'm monopolizing the discussion here, but I will. I probably have the most experience with that. You're right. We really it's still a buyer's market out there. It's the association being the buyers because the hotels, convention centers, and venues, they really desperately want the business. And so we're not seeing, significantly more difficult contracts in terms of requiring more deposits, which, by the way, is a real factor in part of the strategy in negotiating about cancellation, force majeure, rebooking. Whether or not the venue has a significant deposit from your association makes a difference in how they calculate their risk and how the association calculates. Because you can almost be sure if you cancel, you're going to lose that deposit. They're going to say we're keeping it and putting it toward your cancellation penalties. But if there is no deposits, and I'd say most of the contracts we work on, there are no deposits. It gives the association a lot more leverage because then the burden's on the venue to come after the association. But we're not seeing that. We actually are seeing some language when you first look, some new force majeure language that when you first look at it, like Marriott's using it and some others, it's COVID specific, and it seems to be, oh, this is great. They're gonna let us out of our contract. But what it essentially says is that if you get to 60 days out from your meeting and XYZ is in place, basically if COVID's still raging and whatnot, even if there's no state or local restriction on your gathering, we'll let you out. And on the surface, it seems, oh, that's not too bad. But we really don't like that because, first off, most associations cannot wait until 60 days out to cancel. It's just too long. I hear this every single day. We have had some that have waited, and if you can wait that long, you're almost going to get a surefire, pass on cancellation penalties and having a successful force majeure. But most can't wait that long. And the way it's written, what it seems to suggest is that any termination prior to that would not be eligible for force majeure. So you're kind of narrowing your force majeure options if you agree to that language. So we've actually pushed back and stricken that language from new contracts we've been working on.
Yeah. Hey, Peter, I think I saw you come off mute. And you're off mute, but we can't hear you. Was there anybody else that wanted to chime in while Peter's miming his response? I don't know what's happening there, Peter. I don't think it's something we did.
It's my computer.
Oh, we can hear you now.
My computer thinks I'm smarter. Can you hear me now?
Yeah.
Yes.
I've been going back and forth between earphones and my computer, and yeah, Tina Weimar, you're loving this, aren't you? I was just going to say on Monday I knew you were going to say that. On Monday, I had a chance to attend a meeting at the Ritz-Carlton, my first in-person meeting since February, and Marriott did an event with 30 of its clients, and then they had about 200 people on, and there was a lot of discussions about contracts. The long and the short of it is what Jeff Tenenbaum said. These hotels are going to bend over backwards at most centers to get our business back. They just want those of us on this call, right, to meet in some way. And all the liability and risk that Jeff and our insurance panel are talking to us about, is what we're worried about. And the last quick thing I'll say is one of the other interesting themes out of that discussion was, it was great to be in the room with the Marriott, senior mucky mucks who are knowledgeable and doing all the things you would expect good leaders to do, to give them all the credit that they earned and they deserve. There's a real breakdown. Our respective events teams or legal teams are talking to on-site salespeople. There's like this happening up here and this great leadership discussion being had, and then down here, we're all trying to implement, and we're seeing this onerous language. So there's still a big gap that I think needs to be filled between, in all these hotel brands. It's not just Marriott and convention centers. And the risk, to Jeff Tenenbaum's point, we each keep trying to push risk on the other one, right? I mean, we're trying to get the centers and the hotels to take the risk, and they're trying to get us to take the risk. So I almost think having a year out to fix next year's meeting for ASIS than the less than 90 days we had is worse. I almost think it's worse at this point than it was a few months ago. But anyway, I just wanted to.
And of course, we just lost your lost your mic again there, Peter, just at the end. I didn't do it, I promise you.
I think you're muting me. Thank you.
About shifting risk. We always try to shift risk off to the hotels as much as we can, but there are certain things in terms of COVID, health and safety protocols that the association just can't do, right? You're not going to go and be cleaning all the surfaces and disinfecting and setting up rooms. Hey, you can require them to do things in a certain way, but if you look at the CDC guidance for large meetings, I'd say 2/3 of the things fall on the venue. These are things that the association can't even do. So you just need to obligate them to do it. And then there are certain things that only you can do. They're not going to police mask wearing. They're not going to police social distancing in your meeting room. They're not going to do that. You're going to have to do those things. They're not going to police when your attendees go off site. And so, there is kind of this natural, some things fall into one bucket, some fall into the other to help mitigate each side's risk.
And I'm going to kick this one to the insurance folks first. And in fairness to Seth and Michelle, it might not be necessarily in your areas, because this seems to be more of a directors and officers liability question. Given that we have no national plan and local jurisdiction rules seem to govern, and those are all over the place, does the board have increased liability if the association goes forward with an in-person event? I mean, because the boards, of course, are always concerned about their personal liability if they go forward and make these decisions. So I'm curious. And Amy Doherty, I see you come off mute. I think you have something to say here.
Yeah. Hi, everybody. I'm sorry I'm not on camera. Amy Doherty with Aon, just listening in as well. Just, a point of view on this. Typical management liability policies or directors and officers and employment practices liability policies have express exclusions for claims that arise out of bodily injury or property damage. So that's the first part there. In terms of an insurance policy response with respect to board liability, but I'm sure, Jeff, you know how broad that can be, right? In terms of an allegation of mismanagement or some sort of directional decision that could be problematic. So I don't know, Jeff, if you have any other thoughts on that.
Yeah, well, my initial thought was the same as yours, Amy, is that nonprofit D&O policies, everyone I've ever seen excludes claims for bodily injury and property damage, and a COVID-related claim is going to be a bodily injury claim. So, unless someone ginned up a much broader, set of claims, I don't see how there's going to be coverage under a D&O policy. But insurance aside, association boards really do not have to be, generally speaking, worried about personal liability risk for this sort of stuff. I do a ton. In fact, just before this was working on a presentation I'm giving tomorrow, a board training session for an association board. And one of the things I always talk about in those board training sessions is, how can you be held personally liable, and how can you, and what sort of protections are you? There are so many layers of protection for personal liability, with some exceptions. If certain types of conduct like sexual harassment, antitrust violations, defamation, if a board member engages personally in those things, they're going to be personally liable. But for most other things, even if someone could say that the association was negligent in how it held a meeting and that caused someone to contract the virus, you have the corporate shield itself. The corporate status of the association provides a liability shield between the corporation's liabilities and those of the individuals that run it. Then you usually have indemnification in the bylaws and or the articles of incorporation, where the corporation says, if you get sued because of your service as a director, we're going to step in, protect you, pay your legal fees, pay any judgments or settlements against you. Then you have directors' office liability insurance, which might not apply in this scenario. But then you also have volunteer protection statutes at the federal and state level, which also provide another level of protection for unpaid volunteers. So unless you're just grossly negligent or engaging in intentional misconduct, it's almost impossible to hold someone personally liable for these sorts of claims. By the way, I saw someone asked about those articles. I will be sure to send to Rebecca links to those key articles, and she can share them with the group by email.
Thanks, Jeff. I was going to ask you to do that. Now, Seth, this one's for you. What gets paid out under an event cancellation claim?
Yeah, I saw somebody mention in the chat box about expenses getting paid out for a claim, but what about the revenue? What actually gets paid out is the net loss, proven net loss. So that's really a combination of the loss of revenue as a result of the cancellation or whatever the disruption is to the event, as well as the saved expenses. So a typical loss calculation would be your proven loss of revenue minus any saved expense. So if you reduce your expenses from 4 million to 3 million, that's going to reduce the claim, because first and foremost, we're reimbursing and making you whole by reimbursing that revenue, the lost revenue from attendee registration and exhibitors and sponsors. So again, it's just in a very basic format. It's the loss of revenue minus any saved expense. That's how we get to that net loss amount, which is what's paid out.
So if I can then to use your numbers a little bit, let's say the revenue was insured at $5 million, $4 million in expected expenses, but because of the cancellation, you only had $3 million in expected expenses. The policy would pay the $3 million plus the $1 million in lost profit.
Yeah, what we're doing is ensuring the profit. So in the initial budget, 5 million revenue, 4 million expenses, you're budgeting for $1 million of profit. As it turned out, you got 0 revenue and your expenses were reduced to 3 million. So you ended up 3 million in the hole. So if you compare the two, the original budget and what actually happened, 1 million profit compared to 3 million loss, the difference is 4 million. That's what the policy would pay out.
Yeah, and we're seeing also that there's an obligation on the insured to mitigate loss, whether that's trying to negotiate down or away your cancellation penalties and cut your losses in other areas. And one of the things in the claims that we're helping some of our clients prosecute now with the event cancellation insurance carriers, if you put on a virtual meeting instead, generally they're going to take the revenues that you earn from that to help reduce what you would otherwise get from the carrier. We have one that we're prosecuting right now where the carrier is saying, why did you not hold a virtual event? And basically threatening to kind of use that against the association to reduce the amount of their claim. And what we did, we're about to submit it to the carrier, is a very detailed explanation of all of the reasons why it was just completely impractical to hold a virtual event. And that's why we didn't do it. But that's just a dynamic to keep in mind. Granted, this is only for those of you that have policies that had communicable disease coverage and that were bound pre-COVID.
Correct. And, I would add our experience during this time has been very positive with our claims. We did have the communicable disease insurance coverage. And what we did, and we had learned this from our past hurricane claims, because we had and snowstorm claims, which we had, was we were very upfront with the underwriters and with Aon to say, look, this is what we think is coming. And we brought them in very, very early on into the decision-making process. So it wasn't something where we said, okay, we're canceling the meeting, announce cancellation, and then go let them know that a claim is coming. Instead, we worked with them and said, look, this is what we're seeing and why we're doing it. And is there anything else we need to be thinking about and looking at so that if we've got to do this, the claim is going to get more likely to be more positively handled. That helped a lot. Being upfront with everybody beforehand really makes the process go a lot faster. But mitigation was something we had discussed very early on. What can we do to mitigate our losses? Certainly, the insurance company wants us to do that. And we were interested in doing that too, because we'd rather it have the actual revenue versus the insurance revenue down the line. So we did look at ways that we could try to mitigate the loss, whether it's negotiating with the venues and the hotels, trying virtual events, and our summit dinner I think was a good example of that. It's yes, we're not going to get as much insurance money, and the insurance company appreciates that, but it also lets us stay connected to our community, which is also very important as part of this. So overall, I think that has been very, very positive for us. Here's a interesting question. How far can a carrier go in forcing an event to be rescheduled? We had attempted to do so at the insurance company's demand, and as a result, we had to cancel twice. Needless to say, it's been a nightmare. Seth, I think that's one for you.
Yeah, I mean, if you dig into the policy wording, there is a duty on the insured to make every effort possible to mitigate a claim. When we have a claim filed and we turn it over to an adjuster, the first thing the adjuster is probably going to talk to the insured about is, what can we do to mitigate this? Do you have an option to reschedule the event? And, a number of factors are going to be looked at to determine, is it possible to reschedule? The size of the event, who the attendees are, if it's a group that, doctors have really busy schedules and this one weekend was booked 2 years in advance and there's just impossible to reschedule based on who the attendees are. So they'll look at a number of factors. I mean, from my experience, I'm not aware of any significant pushback on if somebody can demonstrate why they can't reschedule the event, why that's not a viable option. I'm not aware of, any extreme pushback from the carrier or the claims adjuster. But again, I mean, if you look at the policy wording, you do have to do your part to try to mitigate that, whether it is, can we do a virtual event? Can we reschedule it to a later date? And I understand, this year, going back to March or April, we had events being canceled and they were rescheduled for the fall because we all thought in March, oh yeah, everything's going to be great in September. We'll be able to have our event. Of course, we know where we were in September. So they keep getting pushed back further and further. So I definitely understand the frustration there.
Yeah.
And Seth, don't you think that was more of a typical behavior prior to COVID too? Not behavior, but approach by the adjusters to, sort of push on the rescheduling aspect of it, or moving forward with a partial event, as opposed to in COVID. I mean, it seems relatively unprecedented that it would have been pushed to the degree based on a COVID environment. And that just seems unusual to me.
No, it's not COVID. This has always been the case. And like I said, that the wording and the policy has always been the same as it relates to, duty to mitigate the loss. If I think about something like Hurricane Katrina years ago, we saw lots of events getting rescheduled because New Orleans was down for 6 months or so. A lot of events getting rescheduled to Atlanta, or a lot of events were rescheduled, and that's going back several years. But the point is there. I mean, some events were rescheduled, some were not. Again, it depends on the size of the event, how big of a venue you need. The bigger the venue, the harder it is to reschedule because those get booked up so far in advance. But yeah, this is not the whole duty to try to mitigate the loss and reschedule the event if you can. That's not a COVID issue.
Thank you, Seth and Amy. Appreciate that. Interesting question here, and this is probably more for you, Jeff. Is there any language that can be used to protect associations to attendee demographics? For example, vulnerable attendees due to age or health, or international attendees traveling into North America.
Yeah, I saw that question from Liz. So let me kind of rephrase it a bit, because I think this is what you mean. And this is I said earlier, you're always looking for leverage in your with your dealings with the hotels and convention centers, leverage to force them to do a rebook without penalty, or to accept force majeure termination, or sometimes a combination of these. One of the kind of tools in the toolbox that we have is, if you are an association whose members and whose likely attendees, typical attendees, are in a certain demographic or certain situation where, for instance, it would be incredibly risky to them from a health and safety perspective to attend an event anytime in the next 6 months in the US, or they're coming from a lot of countries where there are travel bans and even coming into the country, which exist right now. Or most of them work for employers that have travel bans in place through the first quarter of next year. We have a number of those, a lot in healthcare, a lot in higher ed, some government, those associations of government workers. We have one with a whole bunch of DoD workers that just literally are not able to travel to an event next February. If any of those circumstances apply in your situation, and sometimes you need to do surveys and you need to ask the right questions and at the right time of your likely attendees to get that data. We have been using that as part of our leverage in force majeure termination letters, in just getting leverage with a hotel to say, look, it is impossible for us to hold this event, or sometimes the language more favorable, say commercially impracticable to hold the event for this reason. And here's the survey data to support it. So that is another tool in the toolbox. Most of the hotel lawyers reject that. They don't accept that as evidence of impossibility. They say impossibility only comes from state or local governmental restrictions on holding the event. But we think it is relevant. We have used it, and I think it's had some real helpful influence in some of these cases.
And and this is, I guess, a question to everybody from Mark Dorsey. Have the CBVs been helpful or not in helping to navigate some of these issues? And I'll throw that out there to anybody who'd like to address that.
In cases, it tends to be the larger meetings. CVBs are generally not going to get involved in smaller meetings, but for the larger meetings, multi-hotel, convention center has many hotels. In those larger meetings, CVBs often are involved. And yes, they have been extremely helpful in many of the cases, not all. We've had some where they've just been completely ineffective, not because they didn't want to, whatever reason, personalities or lack of relationships or whatnot. But in some of the cases, they've been absolutely instrumental in helping to work out a solution. And like to Seth's point about event cancellation and rescheduling, a lot of times that's just not possible with these large meetings, right? If you have your big annual conference, you can't push it back 6 months, because then you're going to be competing against your own next annual meeting. So you can only push it to your next open year. And a lot of times these large conferences are the ones that get booked up years in advance, because those are the ones that the CVBs, the convention centers, hotels book first. And then they wait till you get closer to do the smaller meetings, because they want to keep things open for the bigger ones. So a lot of our clients that have these big, citywide meetings, their next open year is until 2028, 2029, 2030. And that's a lot less attractive for the hotels and convention centers. But yes, getting the CVBs involved can be really helpful. I'm thinking of one case where we were able to do a rebook for 2030, believe it or not. And the CVB was very helpful in getting that done.
And Atlanta is getting a lot of props in helping people in this go around. So thanks to Atlanta, they've certainly been a good partner for us also. Any other questions as we're getting towards the end of our time? Issues or any other issues you'd like to address? I think we certainly hit everything that we thought of for today. So
Bob, there's another question in the box from Liz.
All right, hang on. Thank you. All right, so we normally get cancellation insurance for a large convention. However, given the current situation, should we start getting per event meeting insurance, like for board meetings and committee meetings, that will cover contract termination fees, airfares, and travel costs lost by last minute cancellations? Seth, I think that's in your court.
Yeah, we could write multiple event cancellation policies, whether, obviously your big exposure is always going to be the large annual meeting, but whether that's a mid-year meeting or just a smaller board meeting, those can definitely get included on the policy. And in some cases, those, depending on the size, could, maybe even be included for no additional cost under some kind of an automatic coverage feature that we have.
I know, for example, since we insure our annual meeting and our other big meetings, I think for us, it's any meeting of less than 125,000 in revenue or expenses is currently covered. I think that's what ours is, but of course it'll depend on each association. What about the coverage for airfare and other travel costs? I mean, does that reach just to the association, or does that cover when the association may reimburse the board members or committee members that are out of pocket?
Well, what we're ensuring under the policy is the association's revenue and expenses. So if an individual attendee has they're paying their own travel expense, that's not going to get factored into the association's policy. But on the other hand, if the association has 30 staff members flying, and that's obviously included in the budget, that would be factored into a claim if the event got canceled and they lost the airline fee.
So would the key there being that if you want to have coverage for your board and committee members' travel expenses, you've got to include that in your budget when the insurance is being bound. Would that be correct?
Yeah, I mean, we definitely want to, it's a condition of the policy as well to ensure the full value of the event. So the full value of the revenue and the full value of the expenses for the event. If you're not doing that, you'll need to let the carrier know why you're not doing that, and make them aware of that.
Yeah, and Bob, most associations do reimburse or cover their board members' travel expenses, so that would be an expense. But first off, these are not revenue generating events, so any extra premium should be small, relatively small, because there's not a lot of downside risk. But keep in mind what Seth said earlier. You can't get, if the cancellation is related to COVID, which right now, I'm not saying that's the only reason you would cancel the board meeting, certainly not. But if that's the reason, you're not going to have coverage, even if it's a small meeting, even if it's not revenue generating.
Yeah, so not having the COVID coverage, that trumps everything. So, all right, are there any further questions? Somebody noted that, Carla noted that they got their payout for their biggest event of the year within 8 weeks. So that's great. And the question that she's responding to is, what's the typical delay you're seeing between the claim being submitted and payment? And what are the insurance companies requiring for very large claims in terms of detail? So Seth, I think that's yours again.
I mean, in terms of the turnaround time, that's going to vary from, what typically happens at the beginning of the claims process. The adjuster is going to give the insured a list of all the information that we need to review for your claim. Depending on how long that takes to get back into the adjuster's hands, I mean, that's obviously a major factor in the timing, as well as once they send back the first bit of information, if there's follow-ups to anything that was sent back, going back to the client to get additional information. So I think that is probably the main factor. I mean, the other factor we have to consider is that the event cancellation market is just completely slammed right now with claims. Our adjusters are doing a fabulous job given the circumstances, but it's kind of an odd product to work on because you could go 3 months, 4 months without any claims getting filed. And then there's some major occurrence like a really bad hurricane or like this, COVID. And then all of a sudden the adjusters just get absolutely slammed with claims all at once. So you have to be a little bit patient. And just keep that in mind. The volume that they're dealing with right now is going to have an impact on that turnaround time.
And I know our adjuster warned us in advance that not only was he working on event cancellation claims, but he was also responsible for claims related to damages coming from social justice and protests and other things which were happening right at the same time. So we are being patient also, and I think that's the key. But I'm not sensing that there's any dragging of feet by the insurance companies. I think it's more that they're just buried.
Yeah, but if you're not getting a response, like, if you've had some back and forth, or you feel like you're not getting the response that you should, I mean, you need to contact the person on the front lines. I'm one of those people. If on the Aon Showstoppers product, and we're initially, the frontline people who take the initial claim and pass that on to the adjuster to kind of handle from there. But if you don't feel like you're getting the response time from the adjuster, you would definitely want to let that frontline person know.
Yeah, and that's certainly some of the questions that have come in of saying that they're not getting paid and they're not getting any communications back. So I guess the advice there is please push. And another thought, and Seth, maybe more for you, does this threaten the financial viability of the carriers?
I mean, I think right now, any carrier that has COVID claims kind of knows what that looks like. And if they wanted to get out of the event cancellation market, they probably would have by now. So anyone that's still selling event cancellation insurances at this point, I think financially they're okay to proceed. Now, if a year from now we have another major issue where on this scale or even close to this scale, yeah, I mean, that could definitely, it's kind of a fluid situation, but right now, I guess the only way I could answer that is if somebody is still in the game right now, I'd feel comfortable that they're financially viable.
Thank you. And with that, we are at the end of our time. If we didn't ask any questions, we have recorded the chat, so we'll be able to get back to you with some answers. And I appreciate all of our panelists, Seth, Michelle, Jeff, and Mary Kate, for your insight and your time. We appreciate you working on behalf. And of course, you can certainly reach out to any of the panelists directly. We will share the session recording out with all KPAC, Kayak, and KEGAC members in the next couple of days, so please keep your eye out for that as well. Enjoy the rest of your day and take care, everybody, and stay safe and healthy.